In the world of luxury watches, a quiet tension is brewing. While some brands are showing signs of recovery, others continue to struggle under the weight of shifting market dynamics. The latest data from WatchCharts paints a fascinating picture. Pre-owned watch prices have hit a plateau, with certain brands pulling ahead while others lag behind. But here's where it gets controversial. What does this mean for the future of the industry? Is this merely a temporary lull or the calm before another storm? In July 2025, the WatchCharts overall market index experienced a modest uptick of plus 0.2%. Patek Philippe led the charge with an impressive plus 1.5% increase, while Rolex managed a slight gain of plus 0.2%. Over the past 6 months, Patek Philippe has risen by plus 2.7%, and Rolex has climbed by plus 2.0%. On the flip side, Audemars Piguet saw its prices soften further, dropping negative 0.6% in July and negative 1.6% over the same 6-month period. When we zoom out to a 1-year view, the disparities become even more striking. Audemars Piguet's prices have plummeted by negative 4.8%, while Rolex has seen a decline of negative 1.2%. Patek Philippe, however, stands out as the only major brand with a positive year-over-year growth of plus 0.8%. This raises an intriguing question. Why are some brands thriving while others falter? Chapter: A closer look at brand performance in July 2025. Let's break down the numbers further. Patek Philippe was undoubtedly the star performer in July, with its Aquanaut collection rising by plus 1.7%, and the iconic Nautilus gaining plus 1.3%. Rolex's Day-Date also showed resilience, posting a plus 1.2% increase. Meanwhile, other brands faced challenges. Cartier's Santos collection dropped by negative 2.8%. Audemars Piguet's Code 11.59 fell by negative 2.4%, and Panerai Luminor plunged by a staggering negative 4.0%. What makes these fluctuations so compelling is how they reflect broader trends within the luxury watch market. For instance, Patek Philippe's success can be attributed to its limited edition models and the growing scarcity of steel sports watches, which are highly coveted by collectors. As the brand phases out certain models, like the 5712 1A discontinued earlier this year, secondary market dealers gain more leverage, driving prices higher. Spotlight on the Holy Trinity. Who's winning and losing? The Holy Trinity of luxury watchmaking, Patek Philippe, Vacheron Constantin, and Audemars Piguet, continues to dominate discussions. However, their trajectories couldn't be more different right now. Patek Philippe, a beacon of hope. Patek Philippe remains a beacon of stability in an otherwise uncertain landscape. Its 6-month gain of plus 2.7% is largely driven by the enduring popularity of the Aquanaut and Nautilus collections. Models like the Green Dial 5168G, Black Dial 5167A, and Steel 5164A from the Aquanaut lineup, along with the White Dial 5711 and Blue Dial 5726/1A from the Nautilus series, are particularly sought after. The discontinuation of key models has only fueled demand, giving resellers greater control over pricing. Audemars Piguet, struggling to keep pace. Audemars Piguet, on the other hand, finds itself in a precarious position. Prices have fallen by minus 4.9% over the past year and minus 1.6% in the last 6 months, while the Royal Oak collection has fared relatively better, losing about minus 3% annually. Other lines, such as the Royal Oak Offshore, CODE 11.59, Jules Audemars, and Millenary, have suffered double-digit declines. This heavy reliance on a single collection, the Royal Oak, could prove to be both a strength and a vulnerability moving forward. Vacheron Constantin, falling behind. Vacheron Constantin has emerged as the weakest link among the Holy Trinity. In July alone, its prices dropped by negative 0.8%, making it the worst-performing brand tracked by WatchCharts in 2025 so far. Over the past 6 months, the Vacheron Constantin market index has fallen by -5.1%, and the one-year decline sits at a staggering 11.3%. Every collection, from overseas to 56, has lost more than -10% in value over the past year. It begs the question, is Vacheron Constantin losing its appeal, or is it simply caught in a temporary downturn? What lies ahead, stabilization or uncertainty? While there are reasons for cautious optimism, the road ahead remains fraught with challenges. Brands like Rolex and Patek Philippe are demonstrating resilience, but others, including Audemars Piguet and Vacheron Constantin, continue to struggle. Adding to the complexity is the geopolitical climate. As of August 7, 2025, the U.S. has imposed a 39% tariff on Swiss imports under the reciprocal tariffs policy. If no resolution is reached, this could spell trouble for the Swiss watch industry, potentially leading to higher retail prices. Interestingly, the secondary market might benefit in the short term, as budget-conscious buyers flock to pre-owned options. However, as supply dwindles, pricing dynamics could shift once again. Will Switzerland manage to negotiate a better deal? And what does this mean for collectors and enthusiasts worldwide? We'd love to hear your thoughts. Do you think Patek Philippe will maintain its upward trajectory? Or will Audemars Piguet and Vacheron Constantin stage a comeback? Share your insights in the comments below.